I don't love a fixed exit. I just don't love it because and one of the reasons I knew that the Flat Earth Trading Society would work was because out of 100 trades, I knew flipping coins. I knew out of 100 trades, I mean, just the breakdowns of standard deviations, I know that I would get 2.5 that were greater than 2 standard deviations if I let it run. I knew it.
Yeah.
And we had one that went, I think, 6x. And that pays for a lot of losers. It just pays for a lot of losers. So yeah, if you let things run.
Traders, welcome back to Simply Forex and the Sit on Your Hands podcast, the show where expert traders share their insights, knowledge, experiences, and strategies. And if you stay to the end of the show, we are going to take a look at a super interesting trading experiment which was started by our guest today. So let's introduce him. His name is Rob. He is the founder of Maverick Trading and also the conductor of the Flat Earth Trading Society experiment. Did I get that right, Rob? And welcome.
Yes, thank you. You got it perfectly right. Yeah. And I love your tagline of your podcast, the Sit on Your Hands podcast. I've been saying to all of our traders for years, you're a better trader when you're not behind your system for that exact reason. So I love that.
Yeah, brilliant. Yeah, the irony is you make more money by sitting on your hands than being in the market.
Very true.
Yeah. So Rob, where are you calling us from today?
I'm from America, from Salt Lake City, Utah.
Okay, all right, Salt Lake City. Okay, I used to live in Connecticut many years ago.
Okay.
Yeah, Northeast America. So there you go. And Rob, and just tell us a little bit about yourself as a trader. How long have you been trading? Tell us a little bit about Maverick Trading. And we're keen to start talking about this experiment as well, but we'll get to that in a bit. So just tell us a bit about yourself.
Right. Well, let me try to keep this fairly brief because this whole adventure started 28 years ago, and right around 1997, I was about 22 years old, and before that period of time, trading, it was a thing, but you had to go to a firm on Wall Street or maybe a firm in Chicago. That was the only place you could do it. You couldn't get the internet outside of any of those places. So in 1997, we started getting access to the internet, and just regular people could start to dabble into trading. And I was really interested in it. I thought it was really cool. And so I started up a little bit, and I like everyone does at the first, it's a mess. Some days are good, some days are bad. And then I found out about a place called Maverick Trading that was in my downtown area, where you could actually sit on a desk and sit with other traders and like kind of in this collective. So I thought that sounded great. Went down there and I learned so much from these traders that have been on the floor doing it for years. So about 3 years later, I said, hey, I want to do this out by where I live. So I set up my own Maverick Trading office and got all of my friends to come in like, hey guys, you got to check this out. This is awesome. And then really kind of went from there. So I started out in day trading, and that was really the craze at the time back in 1997, 98 was just day trading stocks. And, it was great. But as I said earlier, as a new trader, it's up and down and just kind of all over the place. So I got into options, and options really helped. And what it helped, and I think we're going to end up talking a lot about this in this podcast, is I was making psychological mistakes and the same mistakes. And these mistakes I couldn't seem to cure by being disciplined. I'm a pretty disciplined person. I've never been able to, not stick to a meal plan or a workout plan. And in trading, I just couldn't not do it. And one of my big ones was overtrading. And, obviously some risk management issues. And options really fixed that for me, as you could set basically a completely defined risk and you didn't have need for a stop because what you paid for the option was literally the stop. So then I was able to, what you said earlier, sit on my hands, take a position, know that I had no more than $1,000 of risk. Even if the world exploded, I had $1,000 risk on that position. And it allowed me to really get over those psychological issues. So I really look back and see options as really foundational for me to get through that period of time where you're just an idiot. I'm sorry to hit
Yes,
everyone, but
we've all
everyone who's
been
been
there.
there knows it.
Yeah.
And it got me to the point where I was really able to get some more regimented risk management and learn a little bit more. And in 2007, I got into currencies, trading Forex, and I loved it. And I gotta say, and I tell this to everybody, I'm not totally sure I would have made it as a trader if I started in Forex. The
Okay.
fact that the market was only open for 7.5 hours during the day, where I could not click buttons outside that. And remember, we didn't have internet at our houses. We didn't have internet on our phones. So I had to like drive 30 minutes down to the office. That really
Oh,
probably
really?
saved
Okay.
me. And so I tell everyone, if Forex is your first thing getting into, you've got to really be understanding of the psychological issues, the overtrading issues. And I'm really glad that I started where I did, to where I couldn't be an idiot all the time. I could only be an idiot for 7.5 hours a day.
Yeah,
So
yeah.
that's kind of my evolution, and I ended up taking over Maverick Trading, and
Okay.
we're a prop firm. So I'm in a very really cool situation where I've learned how to trade, but I've been watching over the shoulders of hundreds and hundreds of traders
Yeah,
over a
sure.
period of 20 years, and I've seen every single strategy. I shouldn't say that, because I always think I've seen them all, and then another trader
Yeah,
comes by, and I'm like, "What is this? This is cool," and I'm watching, just so interested. Like, is this going to work? And
yeah.
sometimes these strategies, I think, there's no way this is going to work. It ends up being brilliant. And the ones that
Yeah.
I think are going to be brilliant sometimes fizzle out. So very, very interesting path that I've had to be a trader.
Yeah, sure. Yeah, thanks for sharing it with us, Rob. And I can't help it, you were saying psychology, psychology, psychology. So that was the real big stumbling block for you, and just finding something that suited you as a trader, suited your personality,
Yes.
suited your lifestyle. That was the key for you to, turning that trading around and becoming successful.
Yes, 100%. And the first thing we have our new traders do, first thing they do is they take a trading personality test. And we set this up.
Okay,
We started doing this
interesting.
back in 2009, I believe. And so we developed our own trading personality test. And it's really just based on the Myers-Briggs personality scoring assessment. And so the first thing our traders do is they go through, they take their personality test. It tells them, hey, this is your results. And then we really talk about crafting a trading plan around your personality.
Okay,
Because the
interesting.
closer you can get your trading plan to your personality, the
Yeah.
easier it's going to be to follow and the less psychological battles you'll face. For example, I'm an extrovert. I'm a huge extrovert. I love energy. I love action. And I don't love sitting on my hands. That's just not who I am as a person. So if I tried to build a strategy that was slow and patient, it would be very tough psychologically for me to follow it.
Yeah,
But if
sure.
I were to build a system that was a little bit more active, it would be a lot more natural. So we really talk about building out your trading plan to really fit who you are as a person. It just leads to less battles in the future.
Sure. And I guess it's like a SWOT analysis. It tells you what your strengths are, your weaknesses, the opportunities, the threats to you as a trader.
Yes, and we actually about 2 years ago threw it up online for the public to take. So if you want to give people a link, it's tradingpersonalitytests with an s.com. You can
Okay.
go on there, take a free personality test. It's the same one we have our traders.
All right. Super interesting. Yeah. And just give us a clue of a typical question off there, Rob. I'm just going to see if I could pass the test.
Oh, it's not a pass-fail test.
No, sure. Yeah. Okay.
It's a lot about like it talks about trading. Like in it, do
Right.
you like trading active volatile days, or do you not like trading active volatile days? That right there tells us, okay, is someone introvert, extrovert? Introverts are typically going to be like, whoa, this is a little crazy.
Yeah.
This
Yeah.
price activity. Where an extrovert like me is like, yes, finally it's here. I'm
Yeah.
ready to
Yeah.
go.
Does it also tell you, what sort of wife or partner you should take, that kind of thing? No, I'm only joking.
We do not get into personal life, but there's a lot online that you could go and find that out. They actually have
Right.
like matchmaking stuff with personalities.
Okay, all right, brilliant. I love that. I love the fact you've literally do a test to find a strategy that suits your personality, and it's something we talk about a lot on our channel, right? That you get a lot of people say the holy grail of trading, and that is it. Finding something that suits you, right? I could give you a profitable
Yes.
strategy for me, and you would be unprofitable trading it. You could give me your strategy, and I'd be unprofitable. It's such a
Yes.
unique thing. Yeah.
It's funny that
So
you use the term the holy grail of trading, because one of the things I always laugh about is, as a young trader and you're going through the process, I thought I found the holy grail to trading about 27 times. I found
yeah,
a strategy, an indicator,
yeah,
something, and I'm like, I did it. I
yeah,
found it. I never have to like struggle ever again. And it worked for
yeah,
about 2 months, and then it stopped working, and then I had to find
yes,
another holy grail. And
yeah.
I've been saying there are no holy grails out there to find, but you actually did hit that. The holy grail is to find your system and strategy that fits you like a glove. I love that.
Yeah, yeah, definitely. And you touched on it earlier as well, Rob. You know, you were saying that you trade options and forex now. You trade both of them.
I trade everything. Any
Yeah, okay,
Look, I have a saying that says trading is trading. In the end, everything is simply a ticker symbol, a bid
mm,
and an ask, and a volatility.
yeah,
Some and I just It's like driving a car. Driving a car is this driving a car.
mm,
Some cars are slow, and then you have an F1 race car, which is very fast. The mechanics are the same. The
yeah,
risks are wildly different. But if you understand those risks, you can trade anything. So a
yeah,
symbol's a symbol.
yeah. Sure. We say if it moves, you can trade it.
Yeah, yeah. Look,
Pretty
if there's a
much.
market price and a bid and an ask, and you have
Yeah,
access to the market, you can trade it.
yeah, sure. And then I'm interested just to, I really want to touch on this experiment that you've been conducting, Rob. So it seems to me like at Maverick Trading, it is quite, experiment driven. Like you use a personality questionnaire to find out the right strategy. You've done this experiment that we're going to talk about as well. Now, this experiment, Rob, is called the Flat Earth Trading Society experiment. Again, we'll put a link below, guys, so please check it out. But if you could tell us about this, Rob, I've looked at it myself and I found it fascinating because, there's two schools of thought with trading, right? Tell me if I'm wrong, but I would say, there's traders who just take the trade and sit and forget, right? And then there's traders that manage their trade, right? They want to get involved. And I'm a big believer in managing a trade because the market is such a fluid thing, right? It's not static. When I enter the trade, the market could look very different from when I leave the trade, right? So, tell us about this experiment and about managing trades.
All right. Thank you so much. I love this experiment. When I was a young trader, I heard a story, and I can't remember if I heard it somewhere or read it somewhere, but it's a story about two traders who their theory was it doesn't matter how you pick trades.
Mm,
All that matters is how you manage them, selling losers, holding winners.
mm.
And to prove this, they took the Wall Street Journal newspaper, hung it up on the wall, threw darts. And whatever stock the dart hit, they would flip a coin. Heads they go long, tails they go short. That was their stock selection process. And I think
Foolproof.
they did something like an 8% stop. I can't remember exactly what it was, but it was
Okay.
hey, we're going to sell our losers and we're going to hold our winners.
Mm,
So they chose 10 different stocks every single month for 18 months. And allegedly, they did not have a losing month. I have scoured the internet. Now, again, I heard this story back in like 1997, which is
yeah.
so early in the internet. I've scoured the internet. I cannot find the story and I cannot find the data. I've had a bunch of people reach out to me and said, Rob, it was the turtle traders that did it.
Right.
And I think it is, but there isn't the data. I wanted to know what 10 stocks did they pick every month? What was their win loss? What was their profit factor? What was their Sharpe ratio? I want to know those numbers.
Yeah, yeah.
That doesn't exist. So I thought to
Okay.
myself, you know what? I'm going to do it. I'm going to do it.
Mhm.
And I wanted to make it a little bit conspiratorial, as saying, hey, it doesn't matter how you enter a stock or an option or a forex trade. All that matters is how you exit, because 99% of all the books and information out there are all about the setup. It's always about the
Yes.
setup, and hardly anything is about the exits. And I wanted to show how important that was. Now, so I thought, oh, flat Earth, let's make this, conspiracy
Bit of
driven.
yeah, yeah.
I wasn't very smart of me, because on every single YouTube video, you'll see that there's a disclaimer that says, by the way, the Earth is not flat. This is a conspiracy. I'm sure I
Yeah.
got not like shadow ban on YouTube, whatever. But
Right,
this
okay.
experiment was, I wanted to take 100 trades at random, and all we did is we used a very simple trailing stop strategy with the 2x ATR. Very simple.
Okay.
Very simple to implement, very simple to use. And then we gradually tightened it up as we got profitable. You can go
Okay.
onto YouTube and check out what the measures were. And we did 100 trades. We started it in August of 2023, and we finished it in July of 2024. So it was a full year of trading.
Yeah.
And over that period of time, the account went up by 15%. It was a 40% win rate with sorry, it's been so long, I forget the numbers, but I think it's like a 1.6 profit factor.
Okay.
So, and all these trades were taken randomly. We use some fun things. I use Scrabble tiles, where I just turned over Scrabble tiles, and whatever the ticker symbol was, that's what we traded. I used a
good a
Ouija
reason
board.
as any, Rob. You know.
Yeah, I used a Ouija board. I called my mom, what stock should we buy? You know, she knows like 2 stocks. So, by the way, she had a loser. So don't take stock advice from her.
No, okay.
That one did not work out.
Note to self. Yeah.
But we track these from every time we made them live. So the trade was made live on YouTube. And then we followed up on any trade adjustments, any exits. We updated them all to a journal that you can go online and see the journal. So I wanted this to be just public, to where everyone could see this is live, to where we could see the proof.
Mm-hmm.
And when I started this, I said, hey, look, I could end up looking like an absolute idiot at the end of it. But I've been trading long enough to know that as long as I did enough trades, got a big enough sample size, that there'd be a profit at the end. And this really works well with your message of sit on your hands. And that's, we did no active management on the exits. There was no discretion. There was no let's get out early. We just followed rules.
Yeah. Well, there goes my day job, Rob. I may as well just do that from now on, I've decided.
Well, you know, look, there are some people, and I work with lots of traders, and I've worked with a lot of traders over the years. One of the things I love to do, and I'll give this challenge to anyone that's listening to this podcast, take active management where you are actively managing the exit, and then take a passive management where you've just set a limit or you've set a trailing stop or something. Take your last 100 trades. So if you are an active manager, take your last 100 trades and see, what if you just set a limit and walked away? Would you have better results? And I have to say, probably 95% of the people have better results with just the passive exit.
It's just taking away the psychology, right? It's just, just there's your parameters, away you go.
Well, one of the things that I've studied, I have not read a technical analysis book in probably a decade or more. All I read is trading psychology. That's it. And talking about the entry and the exits, and why the exits are just so important to have really good rules. One of my favorite studies is they wanted to do a study on risk taking and how the brain works when people take financial risk. They had people play a game of chance, something like blackjack. And before there was any money on the line, they hooked them up to an MRI machine, and all of the brain activity was in their prefrontal cortex, where logic and reason are done. Once they were given money to bet, the activity in the prefrontal cortex went away, and it went to the insula, where's our flight or fight response. And in there, you don't make logical, rational decisions. Now, here is the irony. The people playing the game, they still thought they were making rational decisions. They still thought that they were in control. But when you looked at the brain activity, they were using a part of their brain where you cannot control it. That's exactly what happens in trading. When in the setup, there's no money on the line, you're very cool, calm, and collected. You're using your prefrontal cortex. You can be very analytical and very non-emotional. Once that trade goes on the line and you got money on the line, you probably can't use logic and reason. You think you are, but you're not. And that's why it's just so important to get your exits just perfectly executed.
And it's a perfect example of when traders go from demo traders to live traders. They're like, oh, Tom, you know, demo, I'm killing it. I'm the best trader there is. And as soon as they go into a live account, the results change drastically, right? It's a perfect example of that.
Well, it's not just an example. It's literally the reason.
It's
literally, like, if you ever wondered, why does that happen? We know why it happens. You are not using your prefrontal cortex any longer on the exits when money is on the line. So that is the absolute answer.
Interesting, really interesting. And just going back to the experiment, Rob, was it only stocks that you'd done this experiment with?
No, it was not only stocks. It was primarily stocks, probably, I'd say 75 80 of the trades were stocks, but we did some Forex trades. We did some metals trades. We did some futures trades.
And did one
anything
asset class work out better than the other? Did it work better with stocks or better with Forex or better with commodities or whatever? Or was it the same
I
across
don't know the answer to that. We didn't study that. So I'm just going to have to give you some anecdotal evidence, as this is a strategy that a lot of our traders use. It works on everything.
Yeah.
And the great thing, if you use ATR, so for any of you that don't know what their average true range, it measures the past volatility of the symbol. And so obviously, if you're trading a very low moving stock, like something like a Walmart or a Philip Morris, your stop doesn't need to be all that far away because there isn't too much volatility.
Yeah.
However, if you're trading something very, very volatile, then all of a sudden your stop needs to be a lot further away. And ATR literally measures the last, whatever you want to use, 14 days, 20 days of volatility, and says, this is its range. You need to be outside that range with your stop. So the ATR, it doesn't care if it's a stock or a commodity or Forex. It doesn't care. It just measures the volatility and tells you be below that or above that on your stops.
Yeah, sure. And when it comes to entry value, the lot size, because obviously they're all going to move differently, and managing that risk side of it must have been tricky, right? Some would have different size positions than others, or
no. 100% universal position sizes. No ifs, ands, or buts. I'd love to give this analogy, and this is one of the first analogies that I give to our traders, and I call it the 10 trade analogy. The 10 trade analogy, and I love this because it really gets you in the right mindset. You're going to sit down and you're going to make 10 trades over the next week, month, 2 months, whatever it is. And you're going to do your analysis. You're going to look at your charts. You're going to look at your indicators, whatever you use. And the only trades you're going to take are the ones that you are convinced are good ones. You're not going to take the bad ones. You're only going to take the good ones because they fit all your criteria.
Yeah.
Here's the problem with that. Out of those 10 trades, 4 totally suck. 4 are terrible. But you did all your work. You did all your assignments and they suck. 4 of them are going to be terrible.
Yeah.
And you know what? 4 of them are going to be so-so. No matter how hard you tried on your entry, they were so-so. You made a little bit, you lost a little bit.
Yeah.
And then you're going to have 2 that were amazing, 2 that are amazing, or maybe just 1. But you don't know which one that is. You don't know.
No.
You have no idea. And actually, out of those 4 losers, 1 or 2 of them are not just bad, but they are terrible. They're the ones that are going to go 10, 20, 30, 40, 50% against you. So in trading, you have to take those 10 trades and say, I don't know which one of these 10 is the great one. So I got to treat them all the same.
Yeah.
And until they move, you don't know which one they are. And once one gets stopped out, then you know, okay, that wasn't one. And once you have some that are working for you, okay, if you sell them too early, you don't know. If you sell them, you're never going to get enough of a gain to offset your losers. So we're big fans of people starting out with standard universal position sizes.
Okay.
That being said, once you get better, now we get into dynamic position sizing. In Forex, I absolutely love pyramiding. It's pretty much the only thing I do in Forex. I love to take a position, and I call it a teaser position. Let me take a teaser position. Once I'm profitable, I take another position, and I move up a stop. Once it's more profitable, I take another position, move up a stop. All I'm doing is I'm adding to winners. I never add to a loser, ever, ever, ever. If that trade P&L is negative, it's telling me I'm wrong.
Yeah.
If the P&L is positive, it's telling me I'm right. That's where I should allocate more capital. And as long as I keep my risk measures proper, I can lever into that position as much as I want. And the largest position I was able to lever into was in 2008. It was short Aussie yen when the markets were collapsing.
Okay, so yen was getting strength.
Yeah, I was able to pyramid in. It was like 10 or 15 times. I ended up with a 44 lot position on Aussie yen and made a net of 400 plus pips on that. So 160 grand by just leveraging in. And I never took more risk than my initial amount.
Yeah.
So I love pyramiding, but starting out, everyone should start out with universal position sizing because You don't know which ones are going to be the best ones. You have no idea. You think you do, you don't.
No, and I totally agree that the thing with a lot of traders will struggle with, but what your experiment has clearly shown us that it's the years old saying of let winners run, stop your losers as quick as you can, right? But psychologically, that's more difficult to do than as it sounds, right?
Yes,
But
it's very difficult.
a robot-like experiment will make that a lot easier for people. So when it comes to letting trades run, what in terms of trailing your stop, are you waiting for a structure break on the day chart or a moving average? Like once it starts crossing that level, that's when your trailing stop will get hit. And do you encourage traders or any of the traders you've seen, to take fixed reward, like 1:2 or 1:3? Or you always say, look, let's just trail the stop and let it go as far as it wants?
Great question. We don't tell our traders what to do. We will advise, we will suggest, we'll say this is what we've seen in our research. But as we talked about in the beginning, every trader needs to build a system that fits them, not us. And we all understand that they're going to trade much better if they do what they want to do. So as long as everything's back tested, as long as everything's demonstrated tested, and it's profitable, you know what? Go with it. Go with it because you developed it, you figured it out, and you're going to be able to follow it. I don't love a fixed exit. I just don't love it because and one of the reasons I knew that the Flat Earth Trading Society would work was because out of 100 trades, I knew flipping coins. I knew out of 100 trades, I mean, just the breakdowns of standard deviations. I know that I would get 2.5 that were greater than 2 standard deviations if I let it run. I knew it.
Yeah.
And we had one that went, I think, 6x ATR is what it actually ended up going at the end. That was the biggest winner. And that pays for a lot of losers. It just pays for a lot of losers. So yeah, if you let things run, they're great. Now we do like the gradual tightening of a stop, because it is pretty clear to tell when something is overextended and something's had a big run and is very highly likely to pull back. Yeah. We have rules that you can snug up a stop, but to just exit, I think you are most likely using the insula of your brain because I've got such a big gain, I've got such a large percent, whatever it is you're telling yourself. Remember, the bigger your P&L is, it's telling you this is a better one than everything else. Why would you take your money out of the best one ever and stick it in one you have no idea? So I don't love it, but you know what? If it tests out and you're profitable, go with it.
And it almost goes against the other sort of written rule is don't trade your P&L. But in this circumstance, to a certain extent, your P&L is telling you it's a good trade, right? It's in the green, money's going up. Yeah. You're trading your P&L to a degree.
No, you're just trading the chart. The chart is telling you again, whenever you trade a chart, all you're looking at is a supply and demand picture. And let's say you went long in something and you're profitable. What that means is you correctly called that there was going to be a supply demand imbalance where there's more buyers than sellers. That's what you correctly called. And that's why you're profitable. And if you're more and more profitable, it means you got it even more right. Now look, you know that this will reverse. They always reverse. At some point, that imbalance is going to correct itself. You have no idea when. And to even tease that when is setting yourself up for failure. So why don't you just set up a structure where as long as that imbalance is in place, you're long and strong and you're adding to things. Yeah. And then when it does finally go, okay, great. Trade's over, move on to the next one. Yeah. So I mean, definitely don't trade your P&L. And I tell all of our traders, remove the P&L column from your system. Don't even have it in your system. Don't even look at it. That doesn't even exist. You're just trading the charts.
Yeah, we preach the same on this channel as well, Rob, definitely. And Rob, so obviously you've got Maverick Trading, right? You're a proprietary firm and you've had sort of hundreds of traders come through and, you've surely managed some of them very closely and you've seen hundreds of strategies. Now, obviously, we've been talking a lot about psychology. Do you put it all down to psychology, what makes a good trader, or is strategy and risk management just as important, or are they just things that can be easier taught than psychology?
I've said it takes 3 to 6 months to learn the technicals of trading. That's what it takes. It takes 5 to 7 years to learn the psychology of trading.
Yes.
But and I don't want to take away from I don't want to have the Flat Earth Trading Society give the wrong idea that the entry doesn't matter. The entry matters a ton. The entry is very important. It's not, if you don't have the exits correct, I don't care how good your entry system is. I don't care. It doesn't matter.
Yeah.
But if you don't have an edge, then you don't have an edge. Like you have to have an edge. And the only way to get an edge is to build out a trading system and have clearly defined entries. That's the only way to get an edge. So I definitely don't want to take away from the need of technical analysis, building systems, regimented entries. Like that is so important. But you've got to have the other side for that, all that hard work to pay off. And that's where, 99% of everything out there, the books, the websites, everything, spend 99% of it is on the entry, nothing's on the exit. I think it should be 80-20, 75-25, where just get those exits down, just get them down, and then you can really play around with your entry systems.
Yeah. No, yeah, totally agree. Because if you think about entries, Rob, right? We're in an uptrend, it retraces to a nice area of value, we start buying it, right? Entries are not that complicated, right? But managing that trade and the psychology that comes into that, yeah, that's where you earn your bread and butter as a trader, right?
Yeah. Look, if you have your exit system down and it's a profitable system, all your entries are doing is you're just adding on percents. You're just adding on percents of your win-loss. You're adding on a little bit more profit factor by getting in at a little bit better moment. In our experiment, we were just getting in wherever it was at the time. Can you get a little bit better entry point by using some trading rules? And the answer is yes. You absolutely can.
Yeah, sure. And then obviously focusing on the psychology, because I agree with you. Entries and understanding technicals, right, is not that difficult. But the psychology can take years and years, right? And you said 5 to 7 years. It could take longer, could take a bit shorter. Now, again, you're in such a good position because you've had access to all of these traders. What kind of separates the traders that overcome this psychology quickly? It takes them a couple of years and they're like, wow, how did he take to that so quickly? He's a genius, right? And it takes others 6 years and it's harder for them to accept the psychology of trading. So what separates those two from succeeding at different times?
I would never have answered this 20 years ago. Now I've been doing this for 27 years and I look back and it's making me laugh inside that I'm going to say humility. Right. Because as a young trader, I absolutely lacked humility. I thought I knew, I thought I was smart. I thought I was all these things. And looking back on it, that actually slowed my personal development down. The fact that I wasn't able to be self-aware enough to recognize that I had some really defeating behaviors. And it wasn't until I reached that point. And it reminds me of like the first time someone goes to an Alcoholic Anonymous meeting.
I've only been
finally
4
go
times.
there. They've already go there and they say, before they were always, I'll stop next weekend or I'll stop, next month or I'll cut back. When they finally go to that meeting and they say, guys, I'm an alcoholic. And I actually gave a speech at a trader expo here in the US. And that was my first thing I said. I said, hello, everybody. My name is Rob Reinhold. I'm an overtrader. I sometimes do this. I sometimes do this. And I basically did it like an Alcoholic Anonymous meeting. Like, hey, everyone. And I said, look, we're here at this great expo and we have all this software, all these things out there, but none of it's going to work because you suck.
Yeah.
You suck. And I wish you could have seen their faces.
Yeah, I can imagine.
This is supposed to be like a cool speech. This guy sucks.
Is this motivational? Is this?
Yeah. But I basically, went into, look, we all have these problems. And until we fix these problems, we're going to struggle. And it's the same thing with like going to AA. When you finally admit you have the problems and you finally admit that you aren't strong enough to fix them, that you need help, that's the first time you actually can improve, because before that you were lying to yourself.
Yeah.
So I think self-awareness, and everyone's been here in the world of trading. You make the same mistake over and over again, and we beat ourselves up. What? How did you do that again? Are you that stupid? And we beat ourselves up, and we just hurt so much inside. I say, accept who you are. I'm an overtrader. Man, I love clicking a button. And then try to figure out, instead of just trying to fix that through discipline, figure out how are you going to trade in spite of those things, because you will never get rid of them. So for me, one of my favorite stories to tell is just how desperate I was to not overtrade. I have a little security token that every time I sign into my account, I need my security code. And I could not stop clicking buttons. I would make my daily goal, or sorry, my weekly goal on like Tuesday, and then I'd keep trading. I'd keep trading. This is early on, and I'd give it all back.
Yeah.
So I went to my wife and I said, look, here's my security token. Do not give this back to me until next Monday. Okay. No matter what I say, no matter what I do not give it back to me until Monday. She's like, okay. So of course, like on Thursday, I just casually say, hey, that token I gave you, I need that back. She's like, you said not to give it to you. And I said, no, but I just need to check something real quick. So she gives it to me. Sure enough, I give it all back. Just like an addict. Just like an addict. I gave the profit back. And I told her over the weekend, okay, look, this is what happened. I need you to not give it back to me. No matter what, no matter how convincing I am, do not give it back to me. And the next time I tried to get it back from her, she didn't give it to me.
No.
And I tried one more time and she didn't give it to me. And what it allowed me to do is to cut that stimulus and to learn how to go find other things to do with my time. And then over time, I was able to actually stop when I got to my limit, because I had already been doing it for months, not because of my choice, but because I made it to where I literally couldn't do it. So those are the things you have to think about as a trader is you suck. You're going to make the same mistakes every single time. Make a system that bans you or bars you from making those mistakes.
Yeah. And you found that through options pretty much.
Yes. Yeah. Options helped me with, 9 out of 10 times I could be flawless on my exits of losers. And 1 out of 10 times I was like, I think this one's going to bounce here. Move this here. We played that stupid game.
I'll move my stop loss a little bit. Yeah, it'll be okay.
Yeah. And options allowed me just to say, this is my stop. So I sat through everything. I could have a stock that, if I bought a $50 call for $2, and that was my maximum risk, my position size for my maximum risk. I could let that thing go down to 30. And guess what? Sometimes if it's a volatile stock, it recovered and went to 70. And I had a winner on it because I didn't have any decision to make. No decision whatsoever. I could just let it go.
Yeah. Yeah. And do you think traders, or I guess part of the problem is one, admitting the problem that you have in trading, but do you think all traders are aware of their problem? Do you think traders are aware of their issues, and they're like, Rob, I need help with this problem. I need to fix this. I need to find a system to overcome it. Or a lot of them are blissfully unaware that they even have a problem as they enter another 14 trades that day. What do you see? 0
to 12 months, blissfully unaware. And I'm jealous of you. It's so nice to think that you're going to
this must be so
wonderful.
Nice.
And from 1 to 3 years is I'm aware of it, but I still think I can fix it. I'm aware of it. And I've made the mistakes a couple times before, but I think I'm not going to make them again. That's a lie. That's a lie.
Yes.
You are who you are. 3 to 7 years is, oh shit, I can't fix this. What am I going to do? And then during that process, that's when you really start to work on, this is who I am. This is what I'm going to do. How do I be profitable in spite of all this? And this is where, again, I'm a big fan of automation. We don't love what's called a black box trading system at Maverick, where you literally don't ever watch it and it just fires off stuff. We use the term a gray box, where you have automation do a lot of the things you're bad at.
Okay.
We have some traders set of like, if you're bad at the exits, just automate your exits.
Yeah.
If automate all of your signals. Hey, let's take some time off of looking, spending an hour looking at the markets, because that's actually counterproductive.
Yeah.
You only want to know when a signal crosses.
Yeah.
If you
That's
look
super.
if you're an overtrader and you're sitting in front of a screen, you're going to click a button. So make it to where you're not behind a screen. Find some way to not be behind a screen.
Yeah, that's super interesting, Rob, because you think all or nothing with EAs or robots. You think it's either fully automated, right, and I just leave it alone, or I'll trade myself. I've never thought of it like that. Just automating parts where you are not strong in trading. I think that's a bit of a light bulb moment, to be honest.
Yeah, but I mean, this is when you get to that point where you realize you can't fix your mistakes, you then start to think, okay, well, if I'm an overtrader, I can't sit behind my screen. Sitting behind a screen is the worst thing. Here's the problem. The stimulus is so good. I have watched, I don't even know how many hours of candlestick ticks, and I've watched it for so long. It's like crack. At least for sure in the beginning, it was like crack to me. The problem was nothing else competed with that. And so if you are an extrovert like me and an overtrader, you need intense stimulus that is better than that, or else you're going to sit behind your screen. Yeah. So I talk about with our super extrovert traders, like intense workouts. And I've used this term for myself. And there's a saying about a dog, a tired dog is a good dog. If you've ever had a dog before, if you leave that dog alone without exercise for a day or two, they're bad dogs. They're chewing up stuff. They're just they're bad dogs. It's not because they're bad dogs, but they don't have their energy out. You give that dog a 1 hour run, they're going to be a good dog and tired. So I always say a tired extrovert is a good extrovert. A tired Rob is a good Rob. So, I go make sure every day I do a very intense exercise session, and I do it around the time I used to get myself in trouble, which was right around 1.5 hours after the US market opened. So I've been working out every day for the last 25 years around that time. And I do a super, super intense workout. And then when I get back, typically it's a shower. And then all of a sudden I've missed out on the day that I used to get myself in trouble. I'm a little bit tired. There's, an hour left of the market, at least the stock market open. And I'm no longer looking for stimulus. I'm actually good. I'm actually a little bit more patient. So until you admit your problems and then figure out how to trade in spite of them, you're going to keep making the problem. And that's really the crux of going from amateur to professional. That's where you fix it.
And the bit about exercise, I believe there is a direct correlation between going to the gym and trading performance. I think somebody should do an experiment on that. It helps you massively. You haven't got this pent up energy, right? And that's bad with trading, right? And if you can do anything to just get rid of a bit of that energy, then definitely good idea.
I mean, we could talk forever about this stuff, but stuff like stimulants. So I'm a big extrovert, so I love stimulants. I love caffeine. I love coffee. I love energy drinks. I love that kind of stuff. But if I wake up and I take some energy pills and drink some coffee, I'm setting myself up for overtrading. Now, again, these are the things that there's chemicals swirling in your body that are causing you to make the decisions you're making. We think we're making them all in our head, but no, it's chemicals swirling. Did you get a poor night of sleep the night before? Is that going to affect your trading performance? It absolutely is. You need to be really aware. I can't do it myself, but I know a lot of traders, they'll do meditation before sitting down behind their system. If that's what it takes, absolutely. Get centered and get rid of all of that negativity out.
100%. And just, sort of aside from trading, right? Because I know I went through it personally, right? And at the start when I was trading and being an idiot, as you perfectly described, doing all the mistakes, it really led into my personal life, right? And I probably wasn't a great human being, or just different, it was all consuming, right? And now you get to a point where, you're happy with your trading, and it becomes all quite dull and boring, right? There isn't that stimulus. You don't want the stimulus. You want it dull, boring, methodical. The tortoise wins the race, not the hare. How did you find in different stages of your trading how it affected your life?
I love this question. Over the years, as I've been managing traders, and like I said, I've seen all sorts of different strategy styles, and this has happened a handful of times, probably 5 to 10 times, where I'll see a trader who is really good and disciplined all of a sudden become wild and undisciplined and start to take some losses. And I learned after the first 2 times this happened, I now know exactly what's happening. I get on the phone and I call them, and they know the call's likely coming, Oh, great. Boss is calling.
I've done something wrong.
And they start to talk to me about trading. And I said, stop. No. What's going on in your personal life? And every time there's like 5 seconds of silence. And they said, how did you know? I'm going through a bad divorce at the moment. Or, hey, you know what? You're right. I'm having some real bad health issues. Or my dad's dying and I'm having a hard time dealing with it. And then we talk about that. And we just talk about, hey, look, you're not in the right mindset to be trading. Let's just stop. Let's just stop trading, get through what you're going through. Let's not have you lose money while you're doing it. And then when you're in the right frame of mind, come back in. It's so important, and everything is interconnected. I know we think we've compartmentalized all of our lives with what's happening in our family, what's happening in our work life, what's happening with our money situation and the bills. It's all interconnected. If you're going to be a much better trader if you're in a happy place in your personal life, period. There's been 2 times in my career that I've stepped away from trading for more than a month of time. One was in 1999 after taking a really nasty loss because I was an idiot and pulled my stop. And the other was just when I was having some personal issues. I recognized, whoa, this is not a good situation. I need to just back off. It's all interconnected. So, your trading, your personal life, your relationships, it's all interconnected. We have to be really aware of that because it will affect performance.
Yeah, definitely. And it can also lead into your life in a good way, right? Once you get control of this trading and your psychology to a point, right? So it can have positive impacts into your life as well.
Yeah, and I didn't expect this as a byproduct of my deep dive into psychology. But yes, it helped me in my trading. I'm a better spouse. I'm a better spouse because of what I've learned. I'm a better father from what I've learned. I'm a better communicator. I understand now, how do you talk to an INTJ? That's a specific personality. I know when I'm talking to one of my traders and I know they're an INTJ, I know how to talk to them. I know because if I try to tell them what I do, it doesn't matter. If I talk to them their way, I'm very surprised at how big of a difference it made in my entire life to really understand who I was, accept all my flaws, and figure out how to do it. And by default, figuring out other people and how they tick and how to effectively communicate with them. It's been wonderful.
Sure. Yeah, brilliant. I couldn't agree more. I tell you, it really helped me is with playing pool. Right? It's a very simple analogy, but when I trade, all I care about is performance. I don't care about results, right? It's just the process I care about, and me performing as best as I can, win or lose, doesn't matter, right? And when I used to play pool, used to lose a game, you'd be like, oh bloody, I've lost the game. But now I don't care. All I care about is the next game, me performing well, and I've been kicking some ass down my local pub at playing pool as a result.
Well, that's great to hear. And one of the things we like to say in trading is that you have no control of the result. You have no control over your P&L. And that's one of the things that we all think, me in the beginning, is that I have control of, hey, I'm going to make $1,000 this week, that I have control of it. No, I don't. I don't have control of that at all. Because if it's a low volatility market, I'm probably not going to make that, based on my account size. Or if something happened that my system isn't good in this market condition, it's not going to happen. You have literally no control of the results. So don't spend any time or effort on the results, just like you with pool, because look, you could go into a pool game, and if that person is substantially better than you and they're on their game that day, you're not going to win.
No.
That doesn't mean you didn't play a great game.
Yeah, exactly.
And that's actually going to make you better. So love it.
Yeah, playing better players, definitely. Yeah, and we always say the same on Simply Forex. Is control the controllables. You can control your strategy, your entries, right, your exits. You can control your money and risk management, how much you put on a trade. You can manage your psychology to a point, right, with certain systems that you use. Getting the right mindset, but the outcome you have no control over ever.
Nope. Yeah, the market conditions. So again, everyone has a system they trade. And so if you are like a trend trader, which I'm a huge trend trader, we believe in trend trading at Maverick. The more the market trends, the better your results are going to be. The less the market's trend, the worse your results are going to be. You don't have control of your results. You don't have the market conditions are going to dictate what you can make in any given period.
Yeah, totally. And just a couple more questions, Rob. Before we do, guys, if you're enjoying our conversation with Rob, then please go check out Maverick Trading. Check out the Flat Earth Trading Society experiment. We'll leave the links below, guys, so please check that out. Please don't forget to subscribe.
Let me jump in and just say we have two divisions in our business. Maverick Trading is a stock and options trading division.
Okay.
So if you want to get into prop trading, where you trade our firm capital.
Yeah.
If you're stock and options trader, Maverick Trading, we have a Forex futures and crypto division called Maverick Currencies. So maverickcurrencies.com if you're interested in that. So sorry about breaking in on you.
No problem. You carry on. Yeah, and we'll leave those links below the vid, guys, so check it out. And then just a couple of questions about your trading, Rob, because you said you had a huge win with Aussie dollar, Japanese yen. Was that your biggest trade that you've ever had? And if you're happy to talk, numbers, what's the biggest trade you've ever had? And how did that feel? Did it take a long time to get to that, or when you took that trade, you was already at a stage where you were like, I can't control it. It's either
No, this has a great story. So this is a great story, and this is such a good learning moment. The last serious mistake I made trading was in 2008, and it was literally the next trade. So I had been playing this Aussie yen short, and that was the biggest trade up to that date in 2008. So big trade. I remember just thinking, this is awesome. And I knew myself, and I knew that I was actually, once I had a good string of winners or a big win, I became more dangerous. My blood's up, and I'm like, yes, let's double this and triple it. And so I told myself, hey, just chill out. Enjoy this win. Just chill out. Don't trade for a couple of weeks. Yeah. And I didn't.
Okay.
And the next trade I made, instead of pyramiding in, I decided I was going to start with the full position that I wanted to get to. And the largest trade I've ever made to date, and I will never do this again. I started with 100 lots. 100 lots.
Good sign.
I remember clicking that button. My P&L was immediately negative $3,500. That was just from the spread.
Yeah.
And when I saw that, I remember thinking to myself, uh-oh.
You're not a P&L trader, but you can't help
This is a mistake. This is a mistake. But I'm in. Let me just do my trade. Ended up giving back about 40% of that $160,000. Yeah. So mad at myself. So mad at myself because come on, you've been doing this now for 10 years.
Yeah.
You haven't figured this out yet after 10 years. I'm really happy to say that was my last major mistake. I now, when I do have a nice run and a big win, I now get paranoid. I'm absolutely paranoid. Like, oh my gosh, I'm going to screw this up. And now the fact that I'm paranoid, I now don't screw it up. But I hadn't fully admitted that after a string of wins, I'm a gambler. I'm a complete wreck up here, ready for more and planning my family's future and whatever it is.
Going through the Ferrari manual.
Yeah. So now after that one, I'm like, you are the worst trader at these moments. And now I get hyper paranoid. I get hyper aware of why I'm taking trades. And because of that, now I've been able to go for, 15, 16 years without making that mistake. Yeah. So that was my biggest trade to date. I've made much bigger trades since then. I haven't yet made. Got very close in 2021 of one trade being more than $1 million in P&L. It was in the 900s.
And what was that trading?
It was actually on a biotech stock that I had been,
Okay.
again, same thing, pyramiding into. And it was during the whole GameStop, AMC stupid
Right.
thing where every stupid little stock took off. And I've been building up a position in this over time, and it popped. It popped, 700%, whatever it was.
Okay, nice.
So,
yeah.
yeah.
And you didn't make that same mistake. You wasn't like woohoo, and then next day you made the mistake. You were like,
No,
right,
it was. Hey, you were.
Yeah.
Do not screw this up.
Yeah.
Yeah,
Sit on your hands.
Sit on my hands. Yes.
Yeah. Brilliant. And Rob, it's been a joy speaking to you, Rob, and thanks for sharing all your, experiences of trading. We really focused on the psychology of things there, but it is so important. Not, as you just explained there, not only if you have a great winning streak, you're dangerous as a trader. If you have a losing streak, you are dangerous as a trader, right? It just goes to show how important it is to just keep on top of your psychology. And really appreciated your time, Rob.
Before we go, there's one last example I want to bring in, because in the flatter trading experiment, we had a run of 6 winners in a row in December, which was the longest win streak. That was immediately followed by the longest losing streak of 9 trades in a row.
So even 9 in a row. Are the same.
9 trades in a row. The next one after that losing streak was the biggest winner of the entire group. And if you would have taken 9 losses in a row and decided, I'm gun shy, I'm not going to take that next one, or you said, I'm only going to take a half position size on it, you blew it. The math no longer works. That's why uniform position sizing is just so important as a new trader, because psychologically, you're going to do stuff like, when you have a winning streak, by default, you're already going to be trading bigger because your account's bigger if you're using a percent. But you're going to be like, hey, I did 2% on the last ones. I'm going to do 3% on this one. I'm going to do 5%. Yeah. And that's the most likely time after a run that you're going to take a loss. Yeah. And then after a bunch of losses, you're going to be like, I'm going to cut my position size.
Yeah, you're trading scared. Yeah.
That's a mistake. Anytime you deviate from your trading system, it's a mistake. I don't care if you made money or lost money. If you deviated from your system, it's a mistake.
Yeah, totally agree. And the other thing, Rob, is when people have these losing streaks, they want to tinker with it, and they end up completely changing a strategy that would have worked over time, but they've already changed it and they moved on to something else, and then they're chasing their tail.
Yes. We have a rule at Maverick where you cannot change your trading system. You have to set up in the future. So let's say your trading system is struggling. You have to say something like, okay, today is March 1st. If it's still not working by April 30th, I'm going to make some changes. Yeah. Because you can't make a change under duress. When you're under duress as a trader and things aren't working out, you can't make changes at that moment. You can't. It's just a mistake. Your brain isn't in the right place. You're messed up, and it's probably just a statistical losing streak. Yeah. I mean, we do a lot with statistics at Maverick. If you flip a coin, if you track what's the odds of you getting 7 losers in a row, if you flip a coin 50 times, it's like 20%. Just think about that, 50-50. The odds of you getting 7 heads or tails in a row is about 20%. So it's going to happen. It's going to happen. Don't trade it at that moment when then, statistically speaking, you're going to have a better than average return over the next 7 flips. So you can't do it under duress.
No, and just putting a point in a diary is a great idea. You're just like, right, by that date, if we haven't seen some success in this strategy, then rethink it. Not, oh shit, I've had 7 losing trades, change everything. No, all right, Rob. Well, brilliant. And I've really, I mean, it's been mainly about psychology, but it's been, great talking to you, Rob. And we'll have to do it again sometime. And guys, like I say, brilliant, Rob. We'd love to have you on again. And like I say, guys, please check out Rob's links below, Maverick Trading and the Flat Earth Trading Society experiments. Really interesting, guys. Go check it out. Please don't forget to subscribe to the channel, smash the notification button, and smash that like button, guys. And join our free Discord trading community. We'd love to have you. Rob, thank you very much for your time. And yeah, hopefully see you again soon.
Bye, everybody.
Cheers, Rob.